Ok, Luiz, já estão.
Fala pro Eduardo pegar o pulo, porque tem como a gente joga assim, fala.
Já tá. Guys, please. Pay attention, guys.
Pay attention, everyone.
Everyone, pay attention, please. Start. Você já está. Yes.
Hello, everyone. Hello, everyone.
Não, mas eu sei quem tem.
You are talking with the guys in live.
Okay, so hello everyone, live as well on Facebook and YouTube channel. I am Lee Dillon, the CEO of Heart Mortgage. I've been doing this mortgage for close to 20 years, and we have helped many families achieve the home buyer dream in this country. Many families, and wanna tell a little bit what is Heart Mortgage all about. Okay, we actually a mortgage company out of the box. We try to find solutions to our clients, to your problems. Okay, to your problems, and we work with many partners like banks. We actually have a portfolio over 60 lenders that we work with, trying to find products to actually fit in for each of our clients' lives. And basically, we got a great team here with Heart Mortgage. We specialize in doing everything in regards to mortgage. Basically, our people, our team, I see it as the best team to handle your mortgage needs. Okay, and why Heart Mortgage? We just don't work with mortgage. We live the world of mortgage every day. Buy a home is one of people's biggest dream. That's why our company is called Heart Mortgage. We work with our heart to offer the best to our customers and partners. Okay, so basically, Heart Mortgage is actually a mutual culture company. We're Brazilians. We deal with a lot of Latin community. People all over the world actually come to us, not only domestic buyers, but international buyers as well. So we have clients from Mexico, Brazil, Argentina, we got Colombia, we got Uruguay, you name it, Chile, Venezuelan. So people all over the world, from people from Asia, China, believe it or not, like a Japan, come to us to get a mortgage, and we are able to actually, able to actually lend them money, get them qualified through a foreign national program that we offer. And with Hot Mortgage, we believe that the best way to predict the future is to create it today. So we always thinking about like, look, if we have someone's application, like we understand that it's a life, it's a family that it's in need of our product. So basically, we understand that that application needs to close tomorrow. So we gotta see it. Look, we gotta see it today. What's gonna happen tomorrow with the application? So when we're actually analyzing the documentation today, we're visualizing what could happen with that client tomorrow. So that's why we actually, we have that in our DNA here with the company. Okay, we predict the future, what could happen today. Now, what type of programs that we offer with Heart Mortgage? We do have conventional loans, government loans, such as FHA as well, VA, USDA. So we start conventional loans with 0% down, FHA 0% down. We're going to talk a little bit further about that programs. We do offer, again, foreign national loans, hard lending, investment loans, commercial lending, and ITI programs as well. People that don't have Social Security actually can get a loan, a mortgage with us. All right, so The biggest and hottest program on the market right now is the 0% down Social Security and ITI number. What is that program all about? Basically, guys, I'm going to talk a little bit how you can actually qualify for a Social Security or ITI number with 0% down and the documentation that we're going to need from the borrower to qualify for the loan, okay? So if you have someone like that don't have the down payment the money for the down payment and they can't buy a house, now we brought another option to our company so we can help our communities. What we're going to need for IT or social 0% down. The documentation is right there. W-2 employees. We're going to need the most recent W-2, okay? So 2021, the most recent. We're going to need 60 days of most recent pay stub. We're going to need 2 consecutive months of pay stubs in the file. And we're going to need bank statements verifying the deposit. So the money that is getting in, we actually want to confirm that the pay stub that you got, the money that we're seeing there, it was deposited in your banking account. Some people, they get paid, but they don't deposit the check in the bank. So we want to make sure that we're verifying the information, okay? If you're an employee. Self-employed 1099. We're going to need 2021 most recent tax returns. We're going to need year-to-date P&L, profit and loss, okay, 2022. So tax returns 2021, 2022, we're going to need the profit and loss, okay, from January up to current. Also, we're going to need 3-month bank business statements, verifying the cash flow. What that means is, whatever we see on the tax returns, whatever we see on the profit and loss, the monthly payment that we're actually seeing as profit, or the money that the business is making, we want to see that the deposits for the business banking account is coming in. Let's say that you make $20,000 a month, okay? I see that you're rich. $20,000 a month. So we're going to see that in the last 90 days, you got $60,000 deposit in the bank, okay? What else? We need a copy of the business license. So if you have a business, you should have an active license for the business, okay? Now, new employment. Let's say that you just started a new job. You came from being self-employed or working for another company, and now you just found a new job. So we're going to need a letter from the employer confirming start date, salary, and pay stub for verification. Okay? Now, besides all that, we're going to need housing, proof of housing. So, how can we prove that? If you rent today, for the past 12 months, we're going to need the checks that you pay to your landlord. And that could be canceled checks for the past 12 months for the landlord, or if you pay by Zelle, every month you send the check just by transferring, we want to need to see that trail on your bank statement as well for the past 12 months. So that could work. And all that, we could also do a VOR, verification of rent, directly through your landlord. Okay? In some cases, we need to analyze the file first. That could be another option. This is just to start reviewing the documentation with 0% down. Okay? We could ask for more documentation later. Okay? But that's a good start. All right. Any doubts? We want to make this, quick but informative because we got a party to go, right? And we got food, drinks. So, any questions about anything that we just talked here?
I have a question.
You do?
You mentioned that you do financing for foreigners.
Yes.
What is the requirement for the down payment when you're a foreigner? You don't have an IT number, you want to invest in the US, into the
Você leva em consideração na hora de buscar uma empresa para financiar o seu imóvel. Você quer uma empresa que tenha opções de financiamento? Ou você quer uma empresa que tenha agilidade no seu processo? Bom atendimento? É isso que você procura? Uma empresa que tem uma equipe dedicada, pronta para responder às suas dúvidas? A Heartmore tem tudo isso e muito mais. Estamos te esperando. pra gente.
Okay.
So as everybody knows now, we just need to, talk to your clients, see what we can offer for them to get a 0% down, right, Sergio?
Oh, yeah.
Right.
One day dedicated this talk about it because we have a big, Uber Elite community drivers. They're good to go.
So Uber community, they can qualify with 0%.
Only with bank statement.
Only with bank statement. Okay, good. Fantastic. Guys, and now, one of our partners for today, actually, to bring knowledge to you with the Heart Mortgage, it's Kevin. He works for Bridge Title, and he's here today to talk about, how you could read a contract, residential as is contract agreement. So, guys, with no further ado, Kevin, come on over and take it over.
Thank you for the introduction. I appreciate it.
Thank you for coming,
Thank you very
Kevin.
much. Thank you, everybody, for coming. Thank you, Hart Mortgage, for putting this great event on. Also, thanks to Catherine for helping organize this and translating this to Portuguese because mine isn't so good. So, in the next 20 minutes or so, I just want to give you a brief overview of the 2021 revisions to the as-is contract and things that I personally look for when reviewing a purchase and sale agreement. So, if you want to go to the next slide. So a little bit about me. I was born and raised in South Florida. I went to university school in Davie, left for college, and then I came back for law school. I've been practicing law for almost 10 years now, focusing on residential and commercial real estate transactions. So Bridge Title, we bring more than just title insurance to the table. We have over 40 years of experience in both residential and commercial. We're conveniently located around the corner in Boca, and we offer an extremely personalized service. When we deal with our clients, we're not just going to pass it on to the next person. We're always available. We're accessible. A lot of the times we, give our cell phone number to clients, so we can always be reached at any time with any questions.
Okay.
So here I'm going to get into, start, from the basics, the beginning of an as-is contract, just go over some basic things, some changes again that have occurred, and things that, I see when I receive a signed contract that should be in there, but unfortunately they're not in there. So a lot of times this is parties' names, they're filled out improperly. They put the wrong, we just got a contract the other day, they had the complete wrong parties' names as the seller. So, I recommend, looking at the property inspector's website, cross-referencing it, making sure it's accurate so the contract is enforceable. And if the party's name is wrong, an addendum should be done to correct that party's name.
You need
Yeah,
this or
And then one more quick thing here is the property description. When you're filling out the property description, you put in the physical address and the legal. Just so let's say the physical address, you mix up the numbers. The legal provision prevails over the physical address. So it's important. You can also get that from the property appraiser's website. So it's nice to take a few extra minutes, just put it in there, make sure it's accurate. So here we have an update in 2021 to the personal property. They added thermostats, doorbells, TV, wall mounts, and some additional items. One thing you'll notice that's not included there is the washer and dryer. Washer and dryer is not included as part of the purchase and sale. So it's always important when you're filling out the contract to make sure you add those additional things, because oftentimes clients go to a walkthrough, the washer and dryer are missing, and they're wondering, well, where's the washer and dryer? I thought it was part of the contract. It was listed on the MLS. The contract prevails over the MLS. The MLS isn't binding. So it's very important to have that in the contract. And then any things that you want to exclude from the contract, you should also list those items as well. So you have your initial deposit, generally between 1%, 4%, and then, you have your additional deposit, which I always recommend either be on the day the inspection period terminates or within 1 day after that, and, then increase the additional deposit once you know that you're serious, that the buyer is serious about moving forward. And then again, when you're breaking down the contract, you shouldn't leave the loan amount at zero. The loan amount is not contingent, on them receiving $0. So you want to break it down and put in a number in there, which is important. Oftentimes you see it left at zero.
I didn't know that, so that's good information.
Next.
Yeah, go. This is a big one. See it all the time. Escrow agent, always TBD, TBD. Do not put TBD. You should always designate either a closing agent or an attorney. It's very important because oftentimes the initial deposit has to be delivered either with the offer or within 3 days after the effective date. So you can always change the escrow, the title company or the attorney after the fact. The money can be transferred, but you don't want the buyer to be in default because they didn't deliver the initial deposit. So it's important to just put a name in there instead of the TBD. Closing date extension. So this is a good one. We recently had a client who had final approval from the lender. Everything in underwriting was approved. We get to the closing date, but unfortunately, due to the CFPB requirements, they weren't able. They have to get the closing disclosure out 3 days prior, and they weren't able to send the money on that day because the closing disclosure wasn't sent out timely. But they did have approval. The seller says, "Well, I want more money if I'm going to extend the closing date," which I think that's extortion. But anyway. Because of this provision, I called the attorney and I said, "Hey, look, they have underwriting approval. They're completely approved. They just have to make sure they comply, with the requirements." He didn't put up a fight. We, extended the closing date a few days, and we were able to close on the transaction. So it was great. But one thing they did change was it used to be shall not exceed 10 days. Now it shall not exceed 7 days. And you have to make sure this doesn't just apply to anything. It specifically applies to extending the closing date because of the CFPB requirements. So oftentimes people get that confused that you can just extend the closing date. Occupancy and possession, they enhanced this section a little bit as far as tenants. If you have tenants post-closing, the information that you have to provide to them. And then the buyer has 5 days to review that information and decide if it's acceptable, and if it's not, they have to provide a notification, that they don't want to move forward. Another one, often that is unchecked or the wrong box is filled out is assignability. I always recommend that you be able to assign the contract but not be released from liability. Again, this is something that can always be changed later on, but if you put can be assigned without liability, you don't want them responsible for that. So I always recommend checking the middle box, ensuring that you can assign it because, as investment property, sometimes you want to assign it to an LLC or a corporation, to better protect yourself. So it's good to be able to assign it. Here we, financing, which they've changed a little bit in the past year. So when you select a cash transaction, you can still get a loan, but the contract is not contingent upon loan approval. So if you get to the closing date and you say, "Well, my lender's not ready," they're going to say, "Well, sorry, this is a cash transaction. You have to move forward, or otherwise you're in default of the contract." And then you have your mortgage loan contingency with loan approval date. So anything you check off, the buyer is obligated to pay for. So if you check off FHA, conventional, all of those, the buyer is obligated to apply for those. If you check off FHA and they apply for conventional, that's fine. That's not a big deal if they switch programs. But you shouldn't check off all the boxes, and you should also fill in, rate not to exceed, or the term. You should fill in those terms. As I'll get to that a little later why it's important. So this was a big change in 2021. now there are two items that must be done during the loan approval period. The first one, get their mortgage loan approved by the lender. That was there previously in accordance with the terms of the contract that you filled out, not to exceed a term of, the loan type. The other one, the new one that they added is the appraisal has to be done prior to the loan approval, the expiration of the loan approval period. What was happening before is appraisals were taking so long, people would be 3-4 days before closing, the appraisal would come back undervalued, they want to terminate the contract. This affected the seller because the property was on the market for so long, and then it took longer for the seller to put it back on the market and try to resell it. So now you have to have the appraisal prior to the expiration of the loan approval period. So it's important that the appraisal be ordered, very shortly after signing the contract. And if the buyer stays silent and does not notify the seller, let me step back for a second here. So prior to the loan expiration of the loan approval period, there's basically 3 doors the buyer can walk through. They can send written notice that they were approved, they're moving forward. They can send written notice that they have not been approved, but they feel comfortable moving forward. Or 3, they'll terminate the loan transaction because they were not approved, by the lender. Just go back for 1 second.
Go back.
Oh, so yeah, here. If the buyer stays silent and does not notify the seller in writing as to whether he was approved for the loan, the transaction automatically proceeds as cash. This was a new addition. But the seller will have 3 days after the loan approval period to terminate the contract. So it's important if you do a critical date summary, which we always do when we get a signed contract, we send to all the parties. It's the first thing we do with every single transaction. It's an important thing to add now to the critical date summary, so the seller knows they have that little time frame if they want to terminate the contract. Here you have your closing costs. Typically in Miami-Dade and Broward, the buyer chooses the title company. In Palm Beach, the seller chooses the title company. However, not a Florida law, not a Florida statute. This is all negotiable and can be revised in the contract. In addition, they added in 2021 is the seller is responsible for FERPA and withholding reporting charges because FERPA doesn't apply unless the seller is foreign.
I have a question about FERPA. How exactly, the seller is responsible for the FERPA fees, but most of the listings now they asking for the buyer's fee about the FERPA fees, if that's going to be around 15%. Right?
Well, that's withholding. The buyer has to withhold either 10 or 15%. So that's a little bit different. There's fees associated with handling a FERPA transaction, and then there's the withholding, which is basically like an income tax to the seller. So in case the seller leaves the country, they have that money to pay the
Is
income.
that like a hold back to the attorney?
Yeah, you send it to the IRS.
Okay.
Yeah, so it's generally 15%. But there's certain exceptions for residential properties, and if the buyer's going to live there, it'll be reduced to 10%. Special assessments. This is often another one I see that people get very confused about. This does not include condo or homeowners associations. This is completely separate. These are things like energy programs, that you voluntarily opt into, and they're non-ad valorem taxes, and they will show as assessments on the bottom of the property tax bill. So it's important to make sure that you want the seller, if you're representing the buyer, you want the seller to pay all of those special assessments up prior to closing. Otherwise, the buyer's going to assume those, and it can be upwards of $20,000, over a period of 20, 30 years. So it's very important to make sure that you check the right box. And it's always good for the seller to check with their lender if they have to pay their special assessment in full prior to closing. Oftentimes some lenders will require it.
Next.
Yeah, go ahead, thanks. Disclosures, it's very important to, if an HOA is involved, to attach the proper disclosure. If I was representing the buyer, I wouldn't recommend they sign it unless the HOA disclosure is attached. Oftentimes, we receive contracts and no addendum is attached, you just get the contract. So it's important that be attached and signed and reviewed. And then FERPA requirements. FERPA is a tax law that imposes U.S. income tax on foreign persons selling U.S. real estate. So if you buy real estate from a foreign person, you may be required to withhold 10% of the amount realized from the sale. 10% would be an exception, but generally it's 15% is the amount that's withheld. And then properties under 300,000 that the buyer will live in for more than 50% of the time. There's a certain calculation for it. Does not qualify for FERPA. And then the inspection period, as I'm sure all of you know, is a very important time frame. That the buyer has to comply with to make sure they get all their inspections. I always recommend to my buyers that they spend a little extra money on a good inspector, because oftentimes they'll have an inspector who charges $100. He walks through, doesn't really look at anything. Buyer moves in, there's the pipes are all wrong, the electrical wiring's wrong, and then it becomes a mess. And you look back at the property inspection report, there's no mention of it in there. So it's important to make sure you have a good property inspector, and you cancel within the inspection period if the buyer does not want to move forward. Condominium association approval. This is one of the things that takes a very long time. Sometimes they're small associations, small boards. They only meet once a month, once every 2 months. So, but without that approval, the deal can't move forward. This is another big one, right of first refusal. We just got a contract the other day. The box was checked that the association has a right of first refusal. This is not to be confused with right of resident approval. They're completely different. So when when the association has a right of first refusal, you need to get something specifically as the title company. It's a requirement that you get something from the association stating that they are not exercising their right of the right to purchase the property. Otherwise, there's certain title endorsements that can't be issued if you don't have that in writing from the association. So it's important not to get those two mixed up. And then you have here just your basic outline and anatomy of the real estate transaction and how it proceeds. The contract side, again, the critical dates. We always send out to all parties to make sure that everyone is on the same page, so we know what dates the buyer and seller have to comply by. Then you have your due diligence and your title search, lien search, survey. Generally, I recommend that those do not be ordered until after the inspection period, because if the buyer's not moving forward with the property, you don't want them to spend the additional money on a property that they're not going to move forward with. So, and then you have your document preparation and your closing, which nowadays everything is not everyone comes and sits around the table. Everything is on electronic, and then you have your post-closing matters. So that's the anatomy of a real estate transaction. Again, thank you for having me. Does anyone have any questions about anything?
I actually have a question that it comes up all the time, especially realtors, and sometimes we don't have the finance ready for many reasons. And the question that I have is this: like some attorneys, they say, look, if you send out an email just by typing on email that we need to extend this because finance is not ready yet. It may be ready in 3 days or 2 days additional, so we need an extension to protect the deposit. As long as you put in writing on the email sent out, regardless if the seller actually replies back to extend or not, as long as you send the request, you are protected
No,
for the deposit.
No, you should have an addendum signed extending the loan approval period. So the seller has to agree to allow you to extend that period in order to protect the deposit.
So the email is not sufficient, just
No,
to
no, just a simple email is not sufficient. The only time an email may be sufficient is in a release and cancellation situation if they're not if the other party is not responding and they're you sent them the addendum, they're not responding, you haven't heard from them. An email will say I'm terminating this effective immediately. Buyer does not want to move forward. This constitutes my notice. But that's in the event that you haven't heard from them, they're not responding. As far as loan approval period, you should get an addendum signed extending the loan approval period. And people sometimes get that confused with the closing date. They extend the closing date, but really the loan approval period should be extended, past the default of 30 days.
Oh.
I have a question on reference to Lee's question. So if he has to send, the mortgage company has to send a request in writing about the extension time, can that be sent electronically? For
An
e-signature?
addendum?
Yes.
Yeah, that can be
That's
signed.
acceptable.
Yeah, that's fine. It would
Is the
happen as
mortgage
legal.
or the realtor then used to send the realtor?
No,
The mortgage company would tell us, we're not ready
We're
to
not ready
close. And then either, myself or the realtor would prepare an addendum stating that we need to extend the loan approval period by 10 days because the bank is not ready. Then it could be signed, sent to all parties and signed electronically by the buyer and seller.
then it will be sent by the representative, the realtor for the buyer in this case, and could be sent electronically for e-signature.
Yeah,
Okay.
yeah.
And how long is the extension? You said up to 7 days?
but no, that's different. That's only if, so that extension only applies if you don't comply with, the CFPB requirements don't allow you to send the money on the closing date. So you have to send the disclosure out 3 days prior to closing to inform the buyer. So sometimes, they get approved the day before and you can't, they're approved, but, per law, you have to send it out within 3 days. So 1, 2, 3, on that third day, then you can close. So you have up to 7 days, only if it relates to those requirements, not to anything else. If you need to extend the closing date because you can't agree on, a credit at closing or for other reasons that, someone's out of town or whatever it may be, that's completely separate from the 7-day period.
And the mortgage company can inform the buyer's agent about the approval or non-approval. Let's say, does the mortgage company has to tell the buyer first that you need an
Should
extension?
tell the buyer first, yes, and
And
then the
then-
buyer should tell either, their attorney or the realtor or whoever's going to be preparing the addendum.
Like, technically, through the Privacy Act,
Yeah,
we can't be sharing information from our clients to a different party.
yeah. It should
It has
only
to
be,
go through the
unless it's with a written authorization from the
Okay.
client that you're allowed to share, that. But otherwise, yes, it should go directly to the client.
I had a case, the client didn't tell me she didn't get her approval.
Wow.
Yeah.
And I had the listing agent call me, so we're closing or not, so let me find out. And I didn't get a response, then I reached out to whoever I had to reach out to find out.
Yeah.
It just
Happens.
Yeah.
So how soon it can go to the public record after close?
It depends on the county. For us at Bridge Title, we'll record the same day. I don't like waiting to record because recording gives you priority, right? So you don't want anything to take priority over your mortgage or deed or whatever it may be. So generally, it's filed electronically that same day, right after we close. If for some reason we close, much later in the day, it will be done first thing in the morning. That's the first thing that's done, along with sending in the payouts.
Another question that I have is, there's a problem with the flood zone. When they go through FEMA, something with the zip code, that area is a flood zone, but that building, the condominium, they have like an elevation certificate that says we not required to get the flood zone. So in this kind of case, do you guys provide a certificate of elevation?
No, that doesn't come from us. That would come from a surveyor. But in a building, they probably have a flood insurance policy if they're located in the flood zone. If you have just a single family home, Generally, you'll have a survey or you'll have to get a survey and it will show you on there whether you're in flood zone or not. And then you'll have to get flood insurance if you are not in flood zone. Well, thank you again. I appreciate it. And if you have any other questions afterwards, please let me know.
Thank you.
So